How to Increase Your Credit Score by 100 Points in 6 Months by Silverline Insurance. Week 4. Length of Credit History and Types of Credit. Here's what you'll learn in this course. Understanding the role of credit history in credit scores. Strategies for building credit history over time. And finally, tips for managing different types of credit, such as credit cards, loans, and mortgages. Hi, I'm Emma, and welcome to Week 4 of our educational course on improving your credit score by 100 points or more. So far, we've covered credit scores and reports, budgeting, debt management, credit utilization, and making on-time payments. This week, we'll focus on understanding the role of credit history in credit scores, strategies for building credit history over time, and tips for managing different types of credit, such as credit cards, loans, and mortgages. Let's get started. Understanding the role of credit history in credit scores. Your credit history plays a significant role in determining your credit score. It's a record of how you've managed credit accounts over time, including the types of accounts, your payment history, and the age of your accounts. Credit history accounts for 15% of your FICO score and is important to lenders because it demonstrates your ability to manage credit responsibly. A longer, positive credit history generally leads to a higher credit score. Strategies for building credit history over time. Building a solid credit history takes time and consistent effort. Here are some strategies to help you establish and grow your credit history. A. Open a credit card account. If you're new to credit, consider opening a secured or low-limit unsecured credit card. Secured cards require a security deposit, which usually determines your credit limit. Use the card responsibly, making small purchases and paying off the balance in full each month to establish a positive payment history. Note: so long as you pay the account in full every month, this is a great option, as you would avoid paying interest that way. Be mindful to use less than 30% of the credit limit though. B. Apply for a credit builder loan. A credit builder loan is designed to help you build credit by making regular payments on a small loan. The lender holds the loan funds in a savings account until you've repaid the loan in full, at which point you gain access to the money. Note: this would be my last resort. This would cause you to incur unnecessary interest charges. C. Become an authorized user. If a family member or close friend has a good credit history and is willing to help you, consider becoming an authorized user on their credit card account. As an authorized user, you can benefit from their positive payment history and well-managed account, which can help build your credit history. Note: parents can do this for their kids as early as their teens to help build their children's credit history. The downside is if the main cardholder starts making late payments, that also trickles down to you, so be careful with who you choose to partner with on this tactic. D. Keep accounts open and active. The age of your credit accounts is a factor in your credit score. Closing old accounts can shorten your credit history and will lower your score. Keep your oldest accounts open and active, even if you use them infrequently. Now, some credit card companies will close out your account if you haven't used it in a while, so be sure to use your cards at least once per year to keep them active. E. Diversify your credit mix. Having a diverse mix of credit accounts, such as credit cards, installment loans, and mortgages, can contribute positively to your credit score. As you progress in your financial journey, consider gradually adding different types of credit to demonstrate your ability to manage various credit products. Remember to apply this tip over several years. No need to run out and get a different type of credit all in one year. Treat this as a marathon instead of a race. Plan it out. Tips for managing different types of credit, such as credit cards, loans, and mortgages. Managing various types of credit responsibly is essential for building and maintaining a strong credit score. Here are some tips for handling credit cards, loans, and mortgages. A. Credit cards. Always pay at least the minimum payment on time and aim to pay off your balance in full each month. Keep your credit utilization low by using a maximum of 30% on your credit cards and monitoring your spending. Regularly review your statements to check for errors or fraudulent charges. By the way, if you are thinking there is no way to pay your credit card in full each month, this typically means you are overspending. Double-check your budget and challenge yourself to pay your credit cards in full each month. B. Loans. Make on-time payments and avoid late or missed payments, which can have a lasting negative impact on your credit score. If you're struggling to make payments, contact your lender to discuss options for temporary relief, such as deferment or forbearance. C. Mortgages. Ensure you make your mortgage payments on time, as late mortgage payments can severely damage your credit score. If you're having difficulty making your mortgage payments, contact your lender as soon as possible to discuss options for assistance, such as loan modification or refinancing. Important note: before you modify your original loan terms on your credit card, auto loans, or mortgage, ask your lender how this will impact your credit score. If it has no impact, go for it. If it will have a negative impact, maybe it's time to downsize to something more friendly on your budget before it negatively impacts you. Sorry, no magic silver bullets on this one. Lots of people got hurt during COVID with this on their mortgages. Now you know and can make a better decision for yourself. In conclusion, understanding the role of credit history, building credit over time, and managing different types of credit are essential steps in improving your credit score. By consistently practicing responsible credit habits, you'll be able to establish a strong credit history and positively impact your credit score. Keep up the great work, and see you in Week 5. After completing Week 4 of our Credit Score Improvement course, take the following 3 critical action steps to make the most of what you've learned. 1. Assess your current credit mix. Take a closer look at your existing credit accounts, including credit cards, loans, and mortgages. Evaluate how diverse your credit mix is and identify areas where you might need to add different types of credit to demonstrate your ability to manage various credit products responsibly. 2. Focus on building credit history. For this part, think in years instead of months. Choose one or more of the strategies discussed in Week 4 to help establish or grow your credit history. This may include opening a secured credit card, applying for a credit builder loan, becoming an authorized user on a family member's or friend's account, or maintaining your oldest credit accounts. By actively working to build a solid credit history, you'll contribute positively to your credit score. 3. Practice responsible credit management. Regardless of the types of credit accounts you have, ensure you're managing them responsibly. This includes making on-time payments, keeping credit utilization low, and monitoring your credit card statements for errors or fraudulent charges. By consistently practicing responsible credit habits, you'll be on your way to improving your credit score. By taking these 3 critical action steps, you can actively apply the lessons from Week 4 to your financial life, further strengthening their foundation for improving their credit scores throughout the remainder of the course. By the way, do you have questions about any of the materials so far? If you do, visit our Facebook page and let us know. Remember to answer the survey questions to help us track your progress. The results of the survey will help us design insurance products with you in mind.